Well, good day, all. I'm Epstein, and here we are with your metal market wrap-up. And this wrap-up is for a very wild trading day on this Monday, and we're at the 31st of March, the end of the quarter, the end of the month, 2025. Lower stock market, as you can imagine, for the quarter. Looking at a lot of pain, not for the metal traders. The gold market explodes to the upside. Is it going to get up to the 3,200 area now? We will find out. Silver moving up a little tonight. Copper, which got really hit, and you'll see the chart in a minute, giving you a little bounce. But remember what I warned, as this market got up near 540, I said there's a ton of copper coming to America for delivery against the contracts. It makes sense. They'll deliver against them in a big way. Why? The spread of the money was too big. The LME copper, nowhere near the price of this. So if you've got copper that's been registered, and you can deliver it on the exchange, and that's always the key. It's got to be approved to be delivered on the exchange. Well, there was some real money to be made. Energy markets not going the way the president wants at this point, but we'll come back to that. Right now, let's take a look at the reports you're going to get, because you have your hands full tomorrow. You're going to get Red Book Group, their weekly retail sales. But then we start getting the final March manufacturing sector PMI at 8:45. And at 9 o'clock, there's a host of a lot coming out. You get construction spending for February at 9, the all-important JOLTS report. That's the job openings, labor turnover. The last report was about 7.5 million jobs. We'll see how that works out. The Institute of Supply Management released their U.S. March manufacturing sector index at 9, and the API numbers, they'll come out at 3:30. So I'll go in on the financial markets and give you much more of my opinion of the market. Let's do the charts right here, and we can get to that in the next video. When we look at the gold, if you were to close right now, you're at an all-time high, and yes, so far for the week, you've gained, as of today and the early trade tonight, 1.39%. That's impressive. You can see how the market keeps its stepping ladder. Do you remember what I told you, that the market had to make its decision up just the other day? We were right like this. And I said, watch this. You've got yourself a triangle formation. Which way is it going to break out? If it goes up through here, you get your upside move. You took that out, and this, by the way, was Thursday, and the market has just continued on. So that pattern is often a pattern you want to pay attention to see what it does. Remember, we had that wedge pattern also that broke in some of the markets and the stock indices and the like, and that set off a top there. It was a rising wedge, and normally you come out the upside. It didn't force that. So you always pay attention. When we look at swing lines, which connects the current trade to the bar before it, and because this is a daily chart, it's a daily swing line, you get higher lows, higher highs. That's the definition of an uptrend. Now, what's suddenly happening is the 18-day average in red is getting near that last break low. So on pullbacks, we have an idea now, a solid idea, as to where the market might go to. That's a $110 break to find support if it goes down in a big way. Could that happen? Of course it could happen. What if you get a reaction to the Trump tariffs that go the other way than the market's built in here? Anything can happen once we see the tariffs. I'll go into those, as I said, in the financial market. We went back up to the Bollinger Band. It again stopped the market. Did we get an embedded reading? We're doing it again. So you had one reading that was lost. It set up a bear trap because it did not go to the 18-day average. I'm going to repeat. When you lose that reading, you're not looking as a bear to get short and drive the market down. You're looking for corrective moves in the market, and from that corrective move, what's the market going to do? Normally, the word is normally, I'm not talking 50, 60% of the time. My math over the many, many years that I've watched this is a higher percentage. When that gets lost, unless it's regained the very next day, the odds do favor a move towards the closest moving average. It just didn't work this time. Say la vie. You're getting the setup again. We will see what that does. When we look at the gold-silver ratio, we've been here, done that, and this is the zone the market keeps having trouble bursting through. So we'll see if it does anything. So far, silver has not been able to make up the differential to gold. That's why it's staying like that. When you look at the silver market, you see it. The market has not got that uptrend. It's got a lower low, higher high. Each of these rallies including, by the way, today, each of the rallies into the upper Bollinger Band have been met with price breaks, and that's what did occur today. Tonight, you're getting a little bit of a bounce. In the copper market, you fell all the way back to the 18-day average after you lost the bullish embedded reading. This is one of those instances where it did work, but I'm telling you, my work shows that it works more times than it doesn't. Here you lose the reading. You had a 77 reading, unless you get it back the very next day, which you did not do. Bingo. The odds favor before you go up for that high, you're going to make a run to the 18-day average. Does it have to hit it? It generally gets pretty darn close. Here it actually hit it, and tonight you're getting a little bit of a bounce. Are you still in an uptrend? No, you have no trend. Now you have a higher high, lower low. So in the shortest of scopes, while you can see the pattern overall has been good, it has to restructure itself now that it's gone back down there, and we'll see if it can build that pattern again. Momentum-wise, you're trying to point down. Market hasn't been able to close, though, under the 18-day average, giving it downside bias. In the platinum market, once you cleared these two moving averages, actually three, the combination of the 100, the 200 in gray, and the 18-day, and you hadn't done that as of Friday. Here we are on Monday, and once you do it, you get your pop, because how do I explain it? It's like pressure in the market. Market takes off. You're in an uptrend, higher lows, higher highs, and now the question is, can it make it up to that resistance? There's some window envelope numbers up there that could hold it back, and this is the July platinum now that you want to be in, from my opinion. In the dollar index, you came up, couldn't quite get through that upper band, have pulled back here, and the market is awaiting, like all of us, what's the next move by the Trump administration? How does it impact the markets? We've already seen what the world thinks. Now, the currency markets are gone sideways. They're starting to pause out, trying to figure out, what are these tariffs going to do? How are they going to look? I'll talk about that and much more as we get into the financial market update next, and I'll do that right after this. Look in your mailbox, your spam. I offered a 24-hour sale on our research. We cut the price dramatically. 1 month if you're not a current subscriber. That's the key. This is bringing back old subscribers and new people in. That's all that it's meant for. $3 as low as $3.95 for the first month. I don't think you're going to beat that, all right? So take a look, see if you like it. You're not committed beyond that. You make your own decision up from there. You control your subscription, not me. I'm Ira. You have yourself a great day. That sale's going to end probably tomorrow morning. You take care.